Scott Bessent, our Secretary of the Treasury, his press conference about asking Americans to change their withholding to get an automatic wage increase this year is causing a lot of controversy on social media. I'm going to play you the clip and also show you some of the comments. It shows that Americans are divided. Some groups are informed on how our tax system works, and some groups are not informed on how our tax system works. And I apologize ahead of time with some of the language on the comment. But after the video and a comment, I will attempt to clarify and demystify how our tax withholding works and how our tax refund works.
To change their withholding if they haven't already done so, because if you change your withholding, then you will get an automatic real wage increase, be it on a weekly or a monthly basis, and you will be able to keep more of your money this calendar year.
It was unfortunate that Scott left out a few details on who should change their W-4 withholding to get the automatic wage increase this year and who should not change their W-4 withholding to get the automatic wage increase this year. But that's what I'm here for. I'm here to demystify our convoluted, complex tax system that is designed for the richest. For you and I, low to middle class, we can do our tax and estimate our tax with just a single piece of paper. And all the information the IRS publish on a yearly basis a couple months before the year start. So for this current tax year, 2026, we know what the tax rate is by October, November of last year. And I'm going to go over what those are. All this information, you can Google what standard deduction is for 2026 for different filing status and deduction amount for standard deduction. You can see what our tax rate, tax bracket is and how they are taxed depending on the taxable amount. You can see the capital gains, different rate, different filing status. And if you're low to middle class, you can be qualified for earned income tax credit, and depending on how many kids you have, and depending on your adjusted gross income. Or savers credit if you fall under this threshold, and the percent of your contribution with the max that the government imposes depending on your filing status. And then if you have further question, you can look at tax credit for 2026 or tax deduction for 2026 to see what else you are qualified for. As usual, I go with my handy and dandy Google Sheet to illustrate my point. In this scenario, is married filing jointly with no kid. One person make $20 an hour. One person make $23.50, which is reasonable here in West Michigan. And one person put 60% in, the other person doesn't. And they have a family plan for their medical and vision and dental. Because they have high deductible, they can put in HSA contribution. Based on these data points, their tax can be estimated by just using this little section. For this year, 2026, they're married filing jointly with no kid. Their gross income based on the information I put in is $90,480. Because they contribute to 401k, HSA contribution, as well as pay for the medical premium on a weekly basis, that's their deduction for the year, projected for the year. So their W-2 on box 1 should be $80,000 by the end of this year. And they don't have any other income and any other deduction, but if they do, they will put it here. So interest, short-term capital gain, long-term capital gain or loss, or qualified dividend, traditional IRA contribution, or any other deduction. If you take their wage and W-2 and sums up any other income or any other deduction, that brings down to adjusted gross income or AGI. Their AGI is $80,645. Because they're married filing jointly and they take standard deduction, that minus $32,200 from the AGI, which makes their ordinary income taxable amount of $48,445, which makes their federal income tax liability of $5,317.51. So what does that mean? That means they need to make sure they withheld this much by the end of this year. So if the employer only withhold $4,000 based on their W-4 withholding, they will owe the government $1,318. But if they fill out their W-4 withholding correctly, and let's say they withhold just the right amount, a little bit over, let's say $5,500, now they have $182 back. But if they are putting more than what they should, way more than what they should, let's say they put in $9,000 of withholding, now they get $3,682 back. If they only get $4,000 taken out, now they owe $1,318. But what if they have a kid that they can claim? With one kid, the government give you a credit, a full refundable credit of $2,200. So instead of owing, now they have money back of $882. But my original example, they have no kid, so they will owe $1,318. I know I went through it fairly quickly, but that is how simple it is to estimate what our tax liability is for the current year. And if you have an AGI, adjusted gross income, that meet a certain criteria for different credits and different deduction, it can even lower your tax liability even more. I have other videos about tax system that you can look up, and I go over in more detail on the different breakdown and how each of those taxable amounts are taxed, and how ordinary incomes are taxed, and how capital gains are taxed. To sum it up, you get a big refund next year only because you overpaid the current year. You owe the government next year is only because you underpay this year. Our tax rate is determined a couple months before the current year. So with the right knowledge and the right information, you can estimate what your tax liability is. So when you walk around with $5,000 tax refund, $8,000 tax refund, it is not a badge of honor. It just means that you overpaid the government what was your money in the first place. And if you owe the government when tax season comes next year, it just means that you did not sit down and understand based on your income and different deduction and different credit you are eligible for, you are not taking enough out of your tax withholding so that when the tax return comes next year, you end up owing the government. Ideally, what I recommend is you work with your tax specialist or your accountant, understand your income and the different tax deduction and tax credit, and estimate what your tax liability is for the year, and pay attention to how your tax is being withheld on a regular basis to make sure that you are staying in that $500 or $800 range of refund. So this way you get more of your money now and use that money to grow more money in different form of investment that you know and understand. For me, is in stock investment. For you, it could be in real estate or any other form of investment. But be careful. You don't want to have withholding where it is not enough, then you're owing the government back. You just want to stay within that nice medium.